Okay, good morning, folks, and we are live. Happy Tuesday, and I'm just getting up my. There we go. We're live. Yay! Okay, good morning, folks, and that's me. All right. Okay. Good morning. Okay. Okay. I may have to use my phone for comments, but let's get to it. On Well, first off, it's Tuesday. Good morning. Hope you're having a great cup of coffee. What we're going to go over this morning are the uh, headlines that are out on Zero Hedge, what's going on in the market. We'll go over the futures action. We'll go over a few stocks that we're watching. But first, I want to go over some commentary that I made on uh, the members intergroup circle on Sunday evening. And we were seeing that the stock market futures, despite the fact that we had very, very negative headlines coming out, the futures market were ripping up higher. And I was growing very, very suspicious. In fact, I'm going to play the clip for you right now so you can check out what I had to say on Sunday Night Futures Live. So it's going to be interesting to see how we close out the futures session, how we're poised to open up tomorrow morning. Do we hold these gains? Do we get a continuation move higher on a weekly basis? Or do we fade? Because we were going on Friday. We were breaking down on Friday. Is this a dead cat bounce? I'm growing a little bit suspicious of this rally back here, to be honest with you. I want to check out the dollar. I think what we're looking at here is very thin trade. I think it's quite possible we see a reversal of these gains. Yeah, look at these topping tails. All right. I'm not going to be the least bit surprised to see a reversal of these gains by tomorrow morning, because it's very, very concerning that we have headline news out there at current, which is typically very, very negative. Yet the markets are doing the exact opposite. So I'm skeptical of this evening's rally in the markets and on the U.S. dollar. Okay, so there you had it. Those are my comments from Sunday evening. And basically, I was warning, don't get too excited about the futures spiking up higher, because it simply wasn't making sense. Fast forward to yesterday. Here was that breakout on Sunday evening. What happened? We rolled over and we got crushed. So now we did okay. So the markets got hurt, and it appears as though we are probably going to go a bit lower here on these markets. So members, stay tuned. We're probably going to be looking, if this keeps up, we're going to be looking for a setup to the short side on this market. I'm not ready quite yet. I'm ready for perhaps a powerful rally back. The Trump administration did a lot of, for an administration that it's dying to keep the stock market up, they inflicted a lot of damage on themselves yesterday. I'm not saying that they're wrong for doing it. In fact, it's rather admirable, ratcheting up the tensions on China, because they deserve it. But if your goal is to keep the stock market higher, they certainly did not help their cause whatsoever. So I'm growing more and more wary of the stock market, and the president may be his own worst enemy here. And again, I'm not saying that he's wrong, but if you're long of this market and blindly following the assumptions that he's just going to keep jawboning the markets up higher, you know, think again. Unless, of course, the markets begin to favor the thought process that they'll go higher because we have an accommodative Federal Reserve. Now, keep in mind, yields rose yesterday. They did not pull back. So I am skeptical of this market. And we're going to take a look at the bond yield, a bond price in a moment. Good morning. I don't know how to pronounce the first part of your name, but good morning to you anyway. Welcome aboard. All right, so the Russell 2000 is up this morning, but you could see how where are my Bollingers? Everything's new. Computer, everything. I lost all my settings on my old Thinkorswim. Let's get my Bollingers up here. I'm like a kid. Without his toys. And we'll come right back to this. God damn it. This is humiliating. Where are my Bollingers? All right, better. All right, so we have our 3 standard deviation Bollinger Band. Okay, this is better. Good. All right, so you're already weakening up here yet again on the Russell 2000. So be careful here, folks. This market is under a lot of pressure. The S&P 500 rolling over. Here's our dead cat bounce off of yesterday's lows. We just went negative. Looking at the 10-year bond price. All right, so this is important here. We're managing to recapture what was the prior lower band of support, currently resistance. I'm reluctant to say it's support yet again, because this bar here, this is a 4-hour bar. This bar won't close until 9 a.m. Eastern Standard Time. So do we close above the support level? I don't know. We'll let the markets tell us that. RL, good morning. 36 degrees in Tampa Bay, huh? Wow. We have snow here as well. Oh, it's pronounced Mila. Okay. Thank you for that. Phonetic spelling. Now that's quality. A quality viewer. RL2. I bet. Yeah, you guys aren't used to that type of cold down there. My brother lives down there. My mom lived down there before she passed. Yeah, great area. Love Tampa. Clearwater areas, St. Petersburg. All right, so let's watch this bar. This is very critical. We're spiking up higher here. I'll bet you we've been overbought. Yeah, we are. We're spiking up higher, big time right now. We're going to go to the news in a second. A lot going on here this morning. A lot. All right. Moving on. Let's check out the US dollar. The dollar continues to weaken up here. Here's your dead cat bounce from yesterday. Then we just rolled over and we are just off the session lows at current. 15-minute chart. Yeah, we're breaking now. Looks as though this support level here on a 15-minute chart anyway. I'm not a day trader, but this 15-minute chart maybe putting up a defense of where we just closed out that prior bar here. So keep on an eye on the dollar, possible higher lows here. Again, I'm not a day trader. This is only a 15-minute chart. Higher lows. Maybe we'll pop back. I'm more focused on the 4-hour chart. That's my higher level view on an intraday basis, and that's what concerns me. I think that we break and go lower here on the US dollar. So if we're talking about the US dollar, we're seeing a spike in bonds. We're seeing weakness in stocks. The bet is that you're seeing precious metals move up higher. Let's check out gold. Gold is moving up strong out of this base. We dropped down into a base right here on the 7th of November. We've been consolidating ever since, and we are now breaking out on gold. And our gold mining trade did very, very well yesterday. Gold closed down, but the thing to keep in mind is that gold broke out on Friday, flashed a bullish key reversal bar. Yesterday, it did a pullback, retested a couple of support levels, and despite the fact that it closed down on the day, it managed to recapture not one support level, but two. I went over this with members last night on Market Wrap. So gold is looking very good here. Next stop on gold, we may pull back and do a retest of the support level. Like here's the breakout. If we manage to close above this bar by 9 a.m. Eastern Standard Time, we may perhaps pull back the next bar, do a retest. But the price target I'm looking at here is, this is a short-term price target, 1479.20 on spot gold. Thanks for that, RL. Yeah, I was suspicious of it. It just didn't make sense on Sunday night, the way the markets were behaving. Way too optimistic in the face of some really negative headline news that was coming out. So, not completely shocking what happened. Let's check out silver. Yeah, silver moving up higher here. We're back above a 17 handle on silver. Again, this is a 4-hour chart. And you can see that we are breaking out here. I don't want to say we have broken out because we haven't closed yet above this resistance level. I'll drill down here to illustrate. So I want to see a close above this green line here. Let's turn this red because this now becomes support. Okay, good. I want to take a quick look back at those bonds, see whether or not we're maintaining that trajectory. All right, we backed off a little bit. No shock there because we were really heating up. As you can see, this is a 15-minute chart now. We spiked up higher, came very close to resistance. We'll probably pull back here, set up a higher low, and then press forward. We just got a little bit extended on a 15-minute basis. We'll go back to the 4-hour charts. But overall, looking fairly bullish, especially if we close above, again, this support level here, or support resistance here in red. Let's check out crude. Not good. We're up, but I don't think we're going to hold it. I think we're going to roll over here on crude oil prices. Here is our wedge formation, and we are currently flirting with a breakdown below the lower band of support on oil. All right, so we'll see what happens here. Flirting with a breakdown, despite the fact that we're up. I'm viewing this as a dead cat bounce, and we could quite possibly break here and continue to move lower on oil. Let's see what currencies are doing well against the US dollar. I've been talking about the Japanese yen of late and the Japanese stock market, and you can see that the yen is performing very well versus the US dollar. This is a 4-hour chart. Out of curiosity, I want to see how we're doing on a weekly basis. Yeah, this is setting up very, very nicely. We don't have a new weekly low. And the reason why I focus so much on currencies, folks, is that we are very long of the gold mining stocks. Obviously, to make money in the gold miners, what you want to do is you want to see gold move up higher. But for gold to move up higher, historically, you need a weaker US dollar. Not always. The exception is when you have geopolitical risk on the table and both can rally at the same time. But ideally, you have a weaker US dollar, and that impacts the price of gold. Because when you price out gold in Canadian dollar terms, in Aussie dollar terms, the price of gold is at all-time highs. They've surpassed the 2011 highs. We haven't seen that yet in US dollar terms. We're looking for it. So this morning, we're setting up nicely here for weakness in the US dollar, bullish for gold. Let's check out the euro on a weekly basis. Even the euro is breaking out this week. Go figure. This after Christine Lagarde. She's the new ECB chair. Another Marxist left winger, and she's gonna coordinate interest rate policy with global warming. I didn't say this; she did. This came out yesterday. So the euro, this is a tell for the euro. The euro is breaking out on a weekly basis. So way to go, Christine Lagarde. Let's check out Bitcoin. I spoke a lot about Bitcoin on Sunday night. And I mentioned that we may hold the support level. But I predicted that we would pull back further on Bitcoin. Now, technically, I was wrong on both cases. All right, so shoot me. And I'll explain what I'm looking at right now. Let's update this, and I'll walk you through what I was looking for. What I was looking for an ideal situation was a pullback to the low 7,000s, high 6,000s for a retest of the support level here. It didn't happen. But I also mentioned that, you know what, this is when I drew this line. I said, we may get a defense of the support level, and it could hold, but it didn't. So now we're flirting with trying to recapture this support level here on Bitcoin, and I still don't think it's going to hold. It may, for all I know. The market will prove me wrong or right. Let's make this white, actually yellow. Let's see whether or not we catch a bid on Bitcoin or whether we break. If we break this lower yellow line here, we're coming down here to the high 6,000s in all probability. Perhaps 7,000 will hold, but Bitcoin, the jury is out on Bitcoin. I mean, with all the geopolitical risk out there right now, especially out of China, the fact that we're not seeing a bid under Bitcoin, you know, makes me wonder, honestly. You know, if all the geopolitical risk doesn't make Bitcoin move up higher, I'm not sure what will. So look for a spike up on Bitcoin or a breakdown. I don't know which way to say to go here. I wouldn't buy it. I would buy the direction that the market tells me it's going in. If we manage to break out above the 73.92 mark and close there, then the path of least resistance is to the upside. If we break to new weekly lows below this lower band of support in yellow, the path of least resistance is to the downside. We'll let the market dictate which way Bitcoin's going to go. We're not that smart. Let's take a quick peek at some headlines here off of Zero Hedge. I want to see what could be moving the market. Britain's first transgender couple to allow their 5-year-old child to begin transitioning. Well, that should move the market, but I doubt it is doing that right now. UK retail sales collapse. That's not going to move the market. I'm not seeing anything really market moving here, with the exception of yesterday's horrible news. Hong Kong. That's tourism. Not good for Hong Kong, but certainly not horrible for the global markets, at current anyway. Nothing really earth-shattering here. This just looks like continuation move lower from yesterday on the markets. Let's check out some symbol. Oh, I didn't want to pop that up. All right. Let's review Yang. All right, so I mentioned on Sunday Night Futures Live that we were watching Yang. Yang is a leveraged ETF putting you short of China. And I set up this alert here. Looking for a breakout. We're not there yet. We flirted with it yesterday on a weekly basis, but we backed off the highs of the session. This is a weekly chart if I didn't say that. I'm reluctant to go buying Yang at current because we're midway between a trading range. So let's go to the daily chart. But China has a lot of problems here and becoming more and more bearish on China. So we're looking for a close above 50.61, and on a close above that level, we will probably look to open up a long trade on the bear ETF of China, which is YANG. Members expect an alert to come out from us. Taking a look at Amron, this fired off yesterday, an alert, or the day before, and we broke out above this upper band of resistance. So this pharma name is looking pretty good. I would just be careful of the market weakening up here, but we broke out. This is a daily chart, broke out on the 29th, follow through day yesterday, but we couldn't hold all the gains of the day. So I'm a bit nervous about it, but overall we're holding trend here. RSI higher lows, and Stokes beginning to hook back up again with a higher low. So AMRN looking good as a potential long. And again, we'll send out alerts on all of these. Now, I warned on Sunday night about LABU being very extended going into the new week. We were flirting with the third standard deviation Bollinger Band last week, and yesterday we flashed an outside reversal day on LABU. Now, longer term, the sector looks very good. So what we're looking for here is a pullback and a retest of support. If I didn't say yesterday we flashed an outside reversal day, it's still a bit early, so if I'm repeating myself, I apologize. So we're looking for a pullback here to around the $50 mark, and then we'll look to get long of LABU, assuming that that support level holds. If it fails, we want to avoid it like the plague, and of course we'll be watching the overall market. If the S&P 500 is pulling back, yet LABU is consolidating, I'm not going to bet that LABU is going to hold the support level while the S&P 500 rolls over. So we will be doing a pulse check of the market, and I want to see the market firm up along with LABU before we open up a new position here. RL, we are tired of Black Friday and Cyber Monday. You're not kidding. Although I did take advantage of both of them. And I got this super fast computer. It's called iBuyPower. It's a gaming computer. And I got it for the graphics card and the memory. I mean, this thing's super fast and extremely quiet. So I just need to learn how to optimize it a bit better. And I have some stuff coming in the mail as well. I want to check out the utilities. Now this is a UTSL. This is the leverage ETF putting you long of the utilities. And you can see that we've been consolidating here. Let's go to a weekly chart. Now with yields, yeah, we broke down. So far this week, we are down below critical support. The question is, with yields now pulling back this morning, do the utilities catch a bid? I would argue that they probably will, but I'm open-minded. And the one thing I am concerned about here, very much so, is the fact that we have both lines on Stokes trading down below the 50 level. And with that, we know that rallies tend to fade when you have your Stokes down below 50. So be very, very careful here with the utilities on a weekly basis, because they may be setting up as a short. If yields do pull back this week, I would be a reluctant short. However, if yields do spike up higher as they did yesterday, then you can look at the utilities as a potential short trade. Let's leave off with EWW. This is a popular symbol of one of my members. Always ask me about this. I don't talk about it frequently. But we were looking at Mexico as it was breaking out. This is a weekly chart. We broke out back here in October. We're now pulling back to do a retest of the breakout point. So this is becoming interesting. It's a pure play on emerging markets. You got to be very, very careful with these emerging market funds nowadays because a lot of them are levered to China or have a China exposure. And if you believe that China is going to be the Achilles heel of the global financial system, as I do, then you don't want to be long of a broad-based international global fund. Be careful. The Chinese have been forcing companies like MSCI to put a lot of their stocks into their indexes, and that's not good for anyone. I don't trust the Chinese mainland stocks because they lack transparency. I would rather at this point just buy pure plays of particular countries like Brazil. I don't know that to be a good chart yet. I'm just throwing it out there. You have the BRZU, which you could take a look at. Mexico, but Mexico on this monthly chart here, I just pulled it up. Last month flashed a bearish reversal bar. This month we have a continuation move lower. So we're testing support levels yet again here. We need to see a rally back on Mexico before we became interested yet again. So I'm going to set up an alert here. I want to see a break back above. We'll set this for daily. And if it manages to recapture support, then we may have an investable security here. Again, in quotations, possible. All right. And with that, do we have anything else going on here? LAB was up after hours last night. Let's throw it up here. It may have been on thin trade. Yeah. Probably on thin trade here. Let's see whether or not it holds up today. And with that, folks, I am going to sign off. I hope everybody has a profitable trading day. And members, I will talk to you later on this evening on Market Wrap, and we'll recap the day's events. And that, of course, is coming out after the market close. And if you could please click that like button, I'd really appreciate it. It helps me out with the YouTube algorithm. If you want our the week ahead commentary replay or best stock charts for the coming week, go to the website, click the link below, and then enter your email address anywhere on the website. And oh yeah, a lot of my emails, if you're already opted in for the newsletter and you're not getting it, one of the email lists was deleted. So just re-enter your email. If you wonder why you're not getting emails from me, if you're a member, that email list is fine. If you're not a member yet you're opting in to get the free commentary, you may need to re-enter your email address somewhere in the website. Anywhere will do, and we'll get those free emails out to you. So if you're wondering why you're not receiving, it's not intentional. All right, with that, everybody have a profitable trading day, and I'll talk to you soon. Be well.